If you wanted to kick us off just with a little bit of background and intro for those that don't know you, that'd be really helpful.
Absolutely. Rouzbeh Rotabi. I've been in and around payments for 20 plus years. Prior to that, I was working in payroll and HR software sales, but most of my focus has been at the infrastructure level, meaning building the core systems that people build products on top of, whether that's a consumer product like we had at Green Dot, where our platform created the end debit card in people's wallets, or a company like Marqeta, where we did a ton of B2B, such as Affirm, DoorDash, Klarna, et cetera. And then I spent 9 years at Blackhawk, both on the B2B to B side and B2C side in the incentive gift loyalty space. I've always been enamored with how money moved. We moved here from Iran in 1978. And my parents couldn't get a loan because my dad didn't have any credit, even though he sold his engineering firm. So when you move somewhere, you kind of try to understand where there's been most resistance, I always feel, in your life. And financial services and language were the two areas that we just had the most natural resistance.
Really, really good, man. I think it's an interesting time. Some of those that you mentioned too, how much that I guess I'll say cards and payments world has changed. I was having a conversation the other day with somebody, and we were talking about program management, and it's like, what is that now? Right? It is so much different than 5 or 10 years ago. And you look at the Marquetas, the Galileos, a lot of those folks, all that looks a lot different, right? And a lot larger than it did years ago. It's a really interesting time, and sponsors and all the rest. There's some really wild bottlenecks out there too.
Yeah, I mean, I think if you go back, I got in payments in '03, and I worked at a company called Wildcard Systems, first issuer processor that was modern, MPLS servers, where you'd have like our first floor of the building was a data room or a server room. It was always 38 degrees and Antarctic in there. But the best story about this is whenever I would travel to Florida in the corporate office, I used my debit card everywhere. I understood the points, I understood all of that because I was in the space. And the cabs in San Francisco would charge you 5% extra to use a credit card. And if you think about it now, it's like I prefer a credit card. That's how far we've come that no one wants cash. Everyone wants a card. And what's transcended is that the human experience and the human demand has changed the way that people view payments as being a thorn in their side rather than an easement or a ramp to creating more revenue.
Really good call. I totally agree. Then talk a little bit about, if you would, just kind of your view on this shift to embedded finance. I know for probably the three of us, unlike everyone else, this isn't a brand new topic. We've all been watching this evolution for some years, but tell me what you're seeing there and what you're working on, where your thoughts and your head's at.
Yeah, so our focus is commercial banking, commercial payments, both selling into the B2B channel, meaning fintechs, payments companies, vertical SaaS companies, and then also on the banking side. A majority of our pipeline, a majority of our business is selling into commercial banks. For example, Huntington Bank and KeyBank are customers. The biggest thing that I could say is that the technology that banks are using are 60, 70-year-old core platforms. No lie, some of them are written in COBOL. And if you went and pulled an engineer off the 10-year experience, pick one out of the air, not one of them would know how to code in COBOL. So what
Mhm.
the banks are now saying is that the customer experience has more runway than does my core platform or my services because it has a terminal velocity. So if I'm a commercial banker, I'm already losing people to the big six, Citi, US,
Mhm.
Wells, BofA, et cetera. I have to protect my customers. If I don't have a better service or solution, or if I don't have better rates, whether it be yield rates or portfolio cost rates, whatever it may be, how do I protect my business? And I think you combine the growth of the big six, the banking issue that happened in '23 with SVB and the run on the banks, with these platform limitations, the big banks can just buy servers, buy people, buy engineers. But if you're a regional bank and you got $120 billion in assets, you're terrified that someone's going to take 40 billion of that every day.
Right.
And so what you have to think about to yourself is, what am I offering to my customers, and how do I become more nimble than the big banks, and maybe offer them virtual account management, offer them assisted loan services, offer them a secure card, give them teen cards. What is it that I can help on the consumer side? On the commercial side, it's how am I giving them a full suite of solutions of lending, corporate banking, payments and payments operations, treasury management, deposit management services. So if you divide the world up in two, we focus on the latter, not the former. We don't do a ton of, we're not in the consumer business. And there's banks like Key and Huntington, PNC. There's a lot of them that have got out ahead of this and built some really cool, interesting stuff, whether it's with us or without us. There's a modern shift coming, and it's going to happen. And the three problem statements: increase deposits, protect my customers, offer them more solutions so that I can get more revenue. Pretty simple. But if I lose deposits, everything goes downhill for a bank because of my ratios.
I think commercial customers are becoming more in tune to finding ways to make their customers more sticky as well, right? And they're trying to find a way to make sure that consumers are loyal to their brand. And it
Yeah.
seems like embedded finance is kind of the way that they're becoming extremely focused on, engaging with these customers and making sure in the banking world, we always use the word sticky, right?
Yeah, and I think the stickiness, to your point, Matthew, there's 2 points to that, which is my product and my solution sticky, or is my service sticky? Payments, no matter, it's not SaaS. Any type in payments or banking, 70% of it is software, 30% of it is service. And the service really matters. So am I offering additional product lines? Can I offer you a commercial credit line? Can I offer you a line of credit? Can I offer you a residential credit, a residential loan on top of your commercial business? And how am I offering that in a single sign-on aspect, meaning I don't have three different logins to three different experiences? How am I creating a single platform? I'll give you an example of what we're seeing. The reason virtual account management is such a big thing in the industry right now is all the major cores, and they know this, and I'm not slandering them, and we respect them a ton. Their job is to make sure that the bank's financial statements and their ledger and everything is buttoned up every day. So if I'm a, excuse me, if I'm a treasurer of someone that owns 50 McDonald's, which is a $300, $400 million a year business, and I have 50 different McDonald's. In the old days, if they said, hey, I want to have one parent account at XYZ Bank, but I want to have the other 50 in a sub or hidden account, they wouldn't be able to
Mhm.
do that. The bank would say, okay, I can't do that. So here's 50 checkbooks, here's 50 debit cards, here's 50 account numbers, here's one login, and then you're going to go in, and it would drive anyone crazy. And as a reformed accountant, I was a CPA out of college, that would be really challenging to manage day to day. So how do you give them tools and services that can add on into the core, that can do the magic behind the scene, reconcile with the core every day, and be on their way? There's 3 or 4 players in the virtual account space. We're one of them. There's some other ones. It is the number one, it's the number 3 thing that commercial bankers are thinking about, according to McKinsey. McKinsey did a survey and said more than 50% of the banks are thinking about a virtual account management because it gives them ability to increase deposits, offer lines of credit, offer commercial credit, and then also add in payments.
It's a great call out. I think too, you mentioned something, sorry, I can't stop thinking about it, but sort of this competitive nature, right? And I think, if we went back, say, 10 years, you saw that certainly, like you said, the big six, I think they were feeling some of this pain. I'm hesitant to call it banking as a service, embedded finance, but commercial customers that want to do non-traditional things. How about that? Right. And I think in the last 5 years, that's definitely moved into that super regional space. Everybody has, I won't name names that we all know, but some of the really rock star sponsor banks have been cherry picking some really cool accounts from some very conservative and traditional regionals and super regionals that all of a sudden are like, whoa, we need to be able to offer these things. I think to your point, a lot of that may be around things like card issuance, not a shocker. Even some on the lending side, I'm seeing that space is getting a little interesting. But these features, being able to allow your commercial customer to operate much more like the institution, it's a necessity, it's a need, and kind of that point of sale concept, right? All of that is starting to come together in an interesting way that I don't know that your average regional bank, certainly community bank, has a lot of eyes on that yet. Also, I mean, hey, when depends on your largest commercial customer and where your focus is, right? If that's a school and a church, that's probably a little bit different. But, we find some of these that are doing some really interesting, especially kind of retail storefront focused commercial customers. There's a heck of a need there.
Absolutely. I think what you're calling out is that there's niche banks that are focused on commercial banking that have 25 or $30 billion in assets that is very sticky, to Matthew's point, but they're a little bit they're a little bit muted of what they can do because of the bank's technology, and the bank's saying, you know what, we can actually go get all of these services around us. We can get a modern underwriting platform that connects to our commercial lending platform to do real estate loans. Maybe we have a way to do escrow entitlements and escrow accounts and store those on the system and disperse the funds when it's appropriate. So these are the things that they're looking at to grow their business in a way that not only keeps the deposits there, but the the other thing that's happening is in those companies, the treasurer is no longer the 60-year-old treasurer that's been there 25 years. It's someone that's younger, someone that understands technology. So the buyer, if you will, or the user of the software, the user of the bank services, the demographic, the guard is shifting. And I think you're handing it over to people that want a digital first experience, a web first experience. And my mom still goes to the bank and goes into the bank every time. I don't get it. She doesn't. Okay. She's 80 years old. That's how they did it in the old country, and so she does it now. But I can't tell you, when's the last time you guys were in a bank?
Long, long time.
Yeah.
Yeah.
But now it's like, how do you meet the new person that's running the office of the CFO or the office of the treasurer? And let's be clear, America is run truly by companies that make $100 to $500 million in revenue. Sure, there's the big six, the big seven tech companies, but most of America, there's tons of manufacturing, distribution, retail companies that make $400 million a year that bank with your regional bank. And that regional bank needs to have the technology to meet their needs. And that's changing. And I think
Really
there's
well
a
said.
good cohort, what you said about Tanner, what you said about embedded finance. I love what you said, which is like it starts with acquiring and it ends with someone receiving the money. So if
Yeah.
I'm a bank, how do I go capture the transaction on the front end? How do I bank the dollars in between? And then how do I disperse the dollars for the business? If you can own that whole full suite, you've pretty much met your customer's need. And if you can offer them a couple other services, lending, brokerage, whatever it may be, that would be a home run.
Well said.
Let me ask
It's
you this: when you
something.
think of sponsor banks, I'd love to ask you this. I think the sponsor banks are much more savvy. You got Column, you got Lead, you got some folks that are really leaning out there. You got the tried and true ones like Pathward and Sutton. I think and then you saw the Grasshopper news yesterday. They got acquired. I think that there'll be a subset of those that start piling up together and becoming very powerful $6 to $8 billion banks, never going over 10 billion. What's your guys' take on that?
It's interesting, right? So when I look at all the data, you've got this interesting area of, I'd say, areas of focus, right? Certainly the good ones, to your point, right? Maybe that's a lending focus, maybe that's debit, maybe that's prepaid, credit, et cetera, right? Even into things you mentioned like a teen card or other pieces, there's definitely some focus. Everybody wants deposits. I would argue at least in the sponsor bank space, it's free deposits. You might even be getting paid to take the deposits. That's really, really cool. I
Yeah.
mean, shocks me that every other banker doesn't see that, especially in this era that we're in right now of the deposit need. There's no better way. At the same time, you've largely got a lot of these, hey, what do we call them these days? How about just commercial customers, right? Savvy. I heard somebody at Next Moves the other day, it was Walt, called them modern businesses. I really like that. So modern businesses that they have these needs, right? And so it's like we're trying to play defense. Your commercial customers are, at risk of being taken by one of these, shiny, cool sponsor banks that's offering these neat features. At the same time, you could be using that as an offensive weapon, bringing in deposits as well as fee income and everything else, right? And so I think what we're starting to see though is in a good way, these areas of focus are getting stronger. The bad side of that for me, that's a little worrisome, I'll just call it the regulatory aspect. We don't have regulatory visibility into a fintech or modern business that has five different sponsor banks. I can't point to all the reasons that might be a problem, but it's just one of those that somebody smarter than me will figure out we really should have known that. And here's why we wish we knew that. That I think we need to at least have a conversation about. That might be the area that you're speaking to where there is some area of partnership. I think about some of the really positive things, folks like, R&T on the deposit network side, bringing those parties together in a positive way kind of think in that direction if that makes some sense.
Yeah. it makes complete sense. I think it's you've seen the sponsor banks go through it the last 2 years, right? I won't say any names because I think everyone's trying to do their best, but consent orders were being handed out like free cars on Oprah.
Andy. Hmm.
It was just like you get one, you get one, you get one, and I think part of it was a little bit, in my opinion, I'm a bold person, was draconian lawmaking, and part of
Agreed.
it was it was wild. FinTech was hot. ZERP
Yeah.
was there. Let's all go to as many customers as we can, and kind of I don't want to say look the other way, but it was like let's create a very light KYC or KYB.
Yep.
You know,
It,
what's
it,
interesting
it was like,
with embedded, what's interesting with embedded finance is I think we saw fintech take off, BaaS running like crazy. And I think our commercial customers have seen that and they're going to try and find a way to get that market share back. So the question becomes, and I don't know, I think Tanner and I talk about this a lot. This is a campfire conversation you're about to listen in on. You're always talking like, okay, well, is everything going to switch to the fintech and the commercial customers are going to step in and start offering these services to gain that market share back? And I'm really curious, like, are we going to see a shift in the marketplace over the next 2 to 5 years and maybe see fintech kind of take a back seat a little bit to allow these commercial customers to step in and play?
I I like that. I'll say this. This is where I've always thought that fintech and the banks should be friends. It's I'm a car guy. So if you tell me I can get more horsepower out of my 351 engine by doing X to the carburetor and Y to the fuel line and Z to the valves, I would do that. So if I'm the bank and I have this old core and I have this old chassis, but it's awesome, it's whatever favorite color your classic hot rods in, I would say the fintech should be friends. If you can create these other microservices or value added services that bolt onto your core that don't cause you to have a core replacement, which is an act of God at a bank, you could actually get all the fintech business back because the fintech partner can service them directly, but then house the deposits. So for Qolo, if we're doing $1 billion in commercial payments and we need a sponsor bank or a treasury bank, why not do it with someone that's also buying our services? And we have some
mhm.
of those relationships with our customers now. I view us as enablement paths to the future until someone comes up with some wizardry new core that can be deployed um, without a 6 year or 5 year roadmap to transition a core. And I
Which
think
good
we should
luck.
be friends. On the consumer side, I know that all the big banks are terrified of the cash apps and the chimes and all of them, and they should be. But consumer deposits don't really drive American banking. It doesn't.
Yeah, Square's way scarier. PayPal's way scarier. Yep.
Yeah, but if you look at the sheer dollars of trillions of dollars in commercial deposits versus consumer deposits, it's vastly different. Just like consumer credit is dramatically higher than commercial credit.
Yep.
So I think from a depository standpoint, we should all be friends. And everyone can do their thing, Greg. We're a core platform that's additive to your deposits. There's lending platforms, there's debit platforms, we're a payments engine. Use what you want and enhance your services. I think I'll leave you guys, not leave you, I'd love your thoughts on this. There was a gentleman that posted, and I'll share it with you guys after the call. And he said that the hardest thing to change in banks isn't the legacy systems. Sometimes it's the legacy thinking.
Hmm.
So you got this new thing you're selling to the bank, and I'm a legacy banker. I've been in banking, and I don't really understand APIs. I personally don't understand AI to the depth of my brother, who's an AI product manager. He gives me tutorials every other week, literally, because I can't keep up. And
Agree.
it's a matter of like, how do we all come together to say like the system is the thing we're all trying to fix, and meaning and the ecosystem is what benefits. I'd love your guys' thoughts on that.
I think it's really well said. I look, one of the things that I really think about kind of legacy thinking, just talk about core as an example. I think you made a great point there of until somebody builds a modern core and it's like I would venture to guess you're like me in this sense because you've bet a lot on it and been very successful at it, by the way, of being that modular piece, right? Sitting above the core. I don't think anybody's going to build a core replacement. We'll be somewhere else in the world before we get there because I think that the legacy thinking is that we still have the ability to change when we don't. We do maybe a big year. I would guess we probably do 3% core change this year across all banks, maybe a little north of that. That's about 150 banks. So let's pretend that I built this magical new wizard core. and I won every bank conversion every year for like 100 years, it wouldn't be enough. There's too much time value, right, for the industry to change. And we have I mean, I think we all see we have a much shorter term problem. And so I think you've got a heck of a lot more runway than you humbly stated. And I do think that you're in the exact right position. We need to, to a certain degree, relegate the pieces that can be relegated while operating the ecosystem and providing the connectivity to the proper fintech and third party players that can accelerate us. And I think, honestly, I think we have very much the technology to do it. And I'm getting more and more hopeful all the time that we have the ecosystem of people to do it. And I don't think we used to.
That's very well said. Let me ask you this, because a banker told us this. We're in an RFP with a bank, and their division CIO pulled me aside. We're having lunch, and he goes, "If I have my way about it, Rouzbeh, my core will just be a debit and credit ledger that hits my financial system, hits the Oracle system, and lets my CFO sleep at night. And I will build all the services around it that will feed." He said it'll feed the heart, and all the blood will run through the heart. But I've got different body parts doing everything else that's better at it. And I'd
Mhm.
never thought about it
100%.
that way. And I
I,
just said,
I
It's
think it's
funny you
great.
say
nice
that.
thoughts.
Sorry, you got me excited as well because I was a banker at two different banks, and that's exactly was our thesis. Was look, I need my core to be my ledger. It
Yeah,
does a great job running statements. It does a great job of closing things out, but that's it. And
yeah,
how do I go find this other technology outside of that and let the core do what it's supposed to do? And I
yeah.
think the banks that adopt that, and I'm hearing more and more bankers that are say that, I think this is the future. This is the next steps, and I think this is what's going to save our industry, honestly.
So Matthew, as a former banker, one of the things I've been at Qolo 2.5 years. I've been in banking payments whatever 20 years. What I'm hearing less and less of, even in the last year, it's died down. When we first started selling our VAM solution into the market, there was a lot of like, we're building that ourselves. That had gone from being in almost every conversation to being in we won't even try it. Like I think everyone's raised their hand, said uncle, and said, I'm gonna go. That mindset was what was also holding the industry back a little bit of like, I have to build it, it has to be mine. I'd love, as a former banker, I'd love to get your thoughts on like, has the guard shifted of there's people doing this better than us?
Oh, absolutely. And here's why. I think as bankers, we're damn good at loans. Like we understand banking, but we suck as technologists, right? But the majority, like you can go hire some good technologists, right? I'm not saying you can't, but you're talking about shifting an entire organization's culture, what they're built upon, and how their business model is to become a tech shop. That just does not make sense. And I think what we're seeing is you're getting some really smart CIOs in here with some really good banks saying, hey, look, how do we go find somebody internally that understands it and they find the right partners for us to go with versus us building it all out. And I think I think 2 years ago we were naive on that. I don't think that naivety is still there. And I think that's shifting. And the sooner it shifts, which I agree with you, I'm not hearing that as much anymore, the better it is for all of us.
Yeah, I'll quote Matt Harris at Bain Capital Ventures, who was on a board of a company I was at previously. He said banks are going to become museums of technology. If you just think about that, it's like it's true. It's like there's the old 486, there's the old Tandem, there's the old ACH machine that we turned on and it spun up the nacho file every night at midnight. And I think the faster people, that's the wrong way to say it, the quicker people remove the resistance, the faster they'll scale their
Yep,
business.
absolutely.
I agree. I
Absolutely.
think we've got an interesting time too, in the sense that, look, I'm completely commercially focused to the point today. I, I could go all the way to small business or to the big commercial side, but I am business focused. I think it's what we do best. I mean, in banking, certainly in community and regional banking. And when you look at it from that lens, it's very interesting to me to see the smaller community banks that are mostly probably banking mom and pops, maybe 10 employees kind of business is a big one, and then they're able to shift to your point of being small and nimble if they focus less on the technology, having it themselves, and more on the partnering and partnering well, though, but partnering well. And then they focus and look at themselves as being really good at sort of regulatory, at compliance, kind of like a law firm or like a title company, right? Then they're able to sit in this pretty hefty sponsor bank commercial space that's pretty interesting. It's like, I don't know, compliance as a service, I guess would be a theme. That's really what banks are incredibly good at. And strangely enough, that's often the thing that stands in the way of them being good at technology. I say embrace it, right? It's a heck of a nice strategy to embrace. And then as you get into the larger space, your regional and super regional, I think it's a part of a healthy strategy. I think the technology conversation needs to be a lot heavier to the Qolo point.
I agree with everything you're saying. And I think the other thing that I add is, so I live in Southern California. I've worked in the restaurant industry. I have family members in the restaurant industry. There's a bank here called Farmers and Merchants, and they literally have a niche with restaurants down here. And most of the restaurants here bank with them. There's a branch here in our town. If you go to LA, City National Bank, what was their focus? They were the main bank that was lending to Hollywood. So if you go back in the 60s and 70s, they were the ones writing the paper to fund the movies. They were the ones funding the sets to be built, the production facilities, all of those things. That's how they became such a big bank. So if you find your niche, whether you're $4 billion, $40 billion, or $200 billion, you can really carve out a space for yourself. To your point, if you let the technology and mindset drive it rather than being the Department of No.
That's a great call. I've been shocked. Matthew, maybe take a second on this. I don't feel like most of your, community banks back in the day had hardly any niche, or at least one that was super identified, right? A lot of farm and ranch and ag loans, sure, some small business, et cetera. But in the last 3 years, it feels like almost every bank that we talk to has a defined niche and a defined strategy they're trying to go after, and building the technology and the product to get it. That's a really cool twist, I think.
I like the banks are starting to find their identity, right? And they're starting to find ways to become profitable. They're starting to find these technology groups that go help them support those niches. And it's been wildly successful. I remember you mentioned this to me 4 years ago, and I was like, as a banker, what are you talking about? And all of a sudden, the next 3 years, that's all I've heard about. So it's incredible. It's awesome.
Yeah, and I think they're getting smarter, right? I think with the advent of all the tools at our fingertips, where do I want to go? You can start pulling your data and saying, okay, if you run the SIC code for all my customers, where am I doing really well? I'm doing really well in restaurants. I'm doing really well in insurance companies. I do really well in real estate title
Great
companies.
call.
And you could literally start pulling that data and then building around that and hiring people that can go sell into that or go pull someone in that's a neural network into that industry and go get 10 more customers. And
Absolutely.
commercial bankers are salespeople, just like, any salesperson selling technology. You're selling something that's a lot more personal. You're selling
Yep.
something what I say, it's in the living room. They think about your stuff in the living room. I'm not thinking about Salesforce in my living room. I mean, I do when it stops working and then I have to go for a walk. But it's not. I'm not at the dinner table talking to my spouse about like, what's going on. And I think that's a big thing when it comes to insurance, when it comes to banking. Obviously, healthcare is different because you're in their office. But I think the bankers have got smarter and the technology has got smarter. And the big six are scaring, the bejesus out of everyone because they're terrified that, Uncle Jamie's coming for my business. And who wouldn't? He's a brilliant CEO. He has his way about him. He demands a certain level of execution. And there's nothing that they believe they can't do. They believe they can
Right.
be in everyone's pocket, everyone's business, commercial or consumer. And that's a terrifying place to be, that someone with that strong of a balance sheet can come and give them better rates, better services, and take your business.
Well,
Yeah.
it's to your point, we've got to strengthen that life cycle, right? How we support the business, we got to strengthen the whole life cycle.
Personal
You
touch.
said
Going
something
back to
so
Matthew's point of being
smart.
a commercial banker.
You said something so smart. I just want to go back to because I want to make sure everybody caught this. You said we need to go from a department of no
Yes.
to change the mindset, right? And when you said that, I was like, yes, this is what we've been preaching at bankers, helping bankers. This is what we always talk about. It's like, I don't need to walk in the room and you give me 28 reasons why it's no. Let's start off with one yes, and let's evolve from there. And I think you nailed it. And I want to make sure everybody heard that because that is so smart when you said that.
Well, thank you. I worked I mean, Green Dot was a bank, right? The beauty that we had is we were a fintech, and I went there to go start their entire digital platform and sell into Uber and Apple Pay Cash and all those deals that we did. That was when I said, hey, let's go into digital, and they were in retail. The advantage is we had the bank, but I still remember that we had a NIRA, a new initiative request authorization form. It was 15 pages long. And I would just take it and I'd print it out and I'd flip it over and I'd write the 3 reasons why we should do this business.
Love
And
it.
Eric, the chief compliance officer, and I got along. He's like, but changing that mindset, even in a modern bank that's not Citibank, that's not Wells Fargo, that's not Key Huntington PNC, it's big.
I
And that's
love it.
one of the things, like, I don't mean to pitch Qolo, but that's one of the things that we do is we create symmetry with our customers. We're like, tell us your biggest problem, tell us your biggest barrier. Because they're not sometimes the same thing. My problem could be that I want to expand my banking services. My biggest barrier is I don't have the right technology. I don't have the right tools for my sales team. I don't have the right alignment with compliance. If you take that symmetry and create it with your customers and you get on the same side of the table with them, you're going to be able to understand, is this a road worth traveling for both of us? Because we've talked to some banks and they're like, look, we want to do this. I can't get this chief compliance officer past it. I just can't. And you say, okay, well, you call us when you're ready and we'll chat.
Right.
But thank you
I
for the
love
call,
it.
Matthew.
Yeah, I thought it was great. I really I feel like we had a really big full picture today, and I really appreciate the conversation. And you had some good insights, man. I might have to have a beer or two this weekend and think through a couple of the cool things you said. So thanks for joining us, man. I really, really enjoyed it. Let's do it again sometime soon.
Would love to. I hope you guys have a holiday season and enjoy it. And let's chat in the new year.